any other form of. This is Jim. It's 9:25 a.m. in San Francisco, California on March the 22nd. Please note that all discussions, analysis, and information presented are for general informational and educational purposes only and should not be construed as financial or any other form of professional advice. Starting with a view of the Anemoi Terminal day trader, we had that really concerted effort here, the really fake pinning that went on yesterday down to the quadruple aught numbers. And then thanks to GME in the after hours, we had a little catalyst here to pull us up above the three trigger cluster formation and resolve bullishly to the upside. Now you can see it sort of cooling off, and we'll see if this turns out to be a bullish airplane. This looks exactly like most airplane setups. If you guys are familiar with the Anemoi Terminal, you know when price breaks out like that and then starts to cool off, that the 1 minute trigger goes down into the 5 minute trigger, and then once you see that 1 minute trigger start to curl back up and velocity increase again, velocity leads price, and price resolves to the upside. It's called an airplane. So if that does happen, you can see the little air pocket here we talked about yesterday. So the difference between this 440 hourly trigger and this daily trigger up at 532, that represents the air pocket. Right now, the difference between price, the current price, 451, and this 532, that's what gives you this green 20.63%. It just tells you at a glance that if price were to move directly up to that daily trigger, what would the move be? It would be a 20.63% move, green, so to the upside. If we spiked up to the weekly trigger, it'd be a 39% move. If we moved up to the monthly trigger, immediately it would be a 92.29% move. And again, these are all calculated in each time that the hourly price recalculates. So quick glance at the volume characteristics, and I'll carry you all the way back to where we were focused on this last week when I started to post, or the week before last, whenever that was, when I started to post the videos on the YouTube channel for everyone to take a look at. Again, you have your spiking volume highs that form a downtrend. You have your spikes down here in the bottom that are the resting or nesting volume spike highs. And we draw our horizontal line where the horizontal line collides with the downtrend. That's where you expect to see a forced resolution to the lower volume and a spike. And so that's exactly what we saw. But then what we wanted to see to confirm that price wanted to turn to the upside is we wanted to see certain amount of 60 minutes, so hourly bar volume, coinciding with a green bar. So in other words, a bar closing higher than the previous hourly bar. Unfortunately, even though we did see the volume increase, the volume was increasing on the red bars, which meant that we were going to see another leg to the downside, and that's exactly what happened. Now, this particular one we've talked about, this 100% was manipulation, and the reason being we were positioned to start to reverse and close a green bar, and that was on March the 14th. And once the volume started to print hot like that, so once it started to paint volume higher than these red bar volume amounts, that was going to paint an engulfing volume pattern. Any green close would have been very positive. So they worked as hard as they could work to close that bar slightly under the previous bar, but you can see how much firepower it took. So an unusually high amount of volume, 20,776,000 shares. And that was the 10:30. So 9:30 to 10:30 in the morning, my time on the West Coast. You can convert it for New York. Then what we did is we formed another cooling volume pattern here. And you can see spike high, nesting / resting volume. And we started to break out. You can see in these spike highs, this was a red candle. This was a green, so this was starting to look encouraging. This was a green, so all we really needed to do was paint through that red candle right there on a green close, and we're looking really good here. So that's what we did. This was a 7,097,000 share red candle on the morning of the 17th. And then you can see here this morning, we painted a green candle. So green, a close higher than the previous candle from yesterday afternoon. And it was 10 million shares. So 10,090,158 shares. Now, if you look on some of the different charting services, and even on my charting service, if I were to pull up a different chart right now, I can't show you the other charts I work on. They have some proprietary stuff on them, but they actually are showing a red bar here, which is completely bogus. And this morning they showed a red 1 minute closing bar, which was incorrect because obviously the 1 minute was closing above the closing 1 minute bar from yesterday. They showed a red 5 minute bar, a red 15-minute bar, and a red 60-minute, 30-minute, and a 60-minute bar. So completely bogus. The only excuse would be if you're running what's called trending on the candlesticks. So it's a candle with trend as opposed to just a candle. You can see on TradeStation, you can select, but all of my defaults are set to just a regular candle. And so the providers are doing something funky. They've been playing this game on the daily closes because of the importance of 3 green closes in a row, having to do with some of the games they play in naked shorting and settlement and things like that. But they just recently have started to also game every single, well, not game. They just are printing false information on these charting services where they're showing, red bars when it's really a green. So pay close attention to that if you're using, green or red engulfing patterns and things like that for any of your trading. Scrutinize it, hover over and take a look because they are changing colors on bars and it's completely inaccurate. So again, all of this looks really positive, consistent with a turning point. And take a quick look at the 5 minute and I'll show you what's going on here. Now, the 5 minute, we saw that breakout above the hourly trigger. We already went through all of the ABCDE vibration sequence right here that was correlated to this downtrend. So all of the minimum vibrations been taken care of. That's the bull versus bear battleground I talk about, and that's really healthy price action at a turning point. The other thing that catches my eye is the steepness of the trajectory in this first leg off of the lowest low. So as long as we don't take that low out and create a brand new structure, this is our first clue that moves to the upside can be very, very sharp and dynamic. Now, the other thing is, of course, we're going to want to track that speed line in case price starts to take off to the upside and move through the Anemoi triggers. Now, this is not a friendly velocity backdrop for follow through. So it's similar to the GME where price can spike up to the different Anemoi triggers, but it's not advantageous to follow through. So even if we were to spike through all of these trigger levels this week or early next week and attack this speed line up above $10, the way the Anemoi velocity is set up right now, the backdrop of velocity is telling us that it will want to pull price right back down to at least the next lower trigger, if not pulling it back down through multiple triggers. So the only reason that's important is because that's a trading environment. So in other words, if I personally am involved in weekly options, weekly expiration options, or anything that I need to trade actively, anything that's not basically a leap, I need to know that so that I'll know to blow out into upside spikes and then try to reload on pullbacks to whichever trigger levels indicated to see the pullback and the pinning. So that's our setup right here. I'm not going to talk too much about the zones of strength. I told you guys that the 24-hour model is really friendly, more friendly than it's been, more bullish than it's been in a long, long time. So the AMC is subject to after hour / pre-market upside shocks. And that could be coming from anywhere. It could have to do with a bank with short positions, and another acquiring bank comes in and takes a look at the mess that's been created before they took over, and they come in and they either pare down or completely flatten out certain trades. That can cause obviously some short covering. You can always have collateral damage coming from a hedge fund that starts to get hurt badly in their long side positions. You could have completely unrelated move in anything from crude oil or precious metals to commodities to softs, anything. So anyway, the point there is that we have a bullish backdrop. And if I personally were short this stock, I'd be sleeping with one eye open. So anyway, so far so good. You can tell they're definitely doing everything they can do to pin this stock and to keep it prevent it from moving to the upside. That can mean either that there's a really dangerous level here that they just don't want it to go above, because if it does go above that, it'll start a runaway move to the upside. Or it could have something to do with some arbitrage that I don't really understand that might be going on behind the scene related to this AMC vote and all of that. What I do know is that my model looks like whoever it is that's trying to hold this stock down is going to lose their handle on it, and that it is going to start to move to the upside nicely. You guys can see all of the different trigger levels here. You guys can see the retest levels. And as my good friend who is no longer with us on Earth used to say, the rest is up to Mr. Market. Good luck, you guys.